when you look at the markets today, there doesn't seem to be a correlation anymore. So yields are up, stocks are up. What's going on?
Well, the first question I guess we need to ask ourselves is that the sell-off in equities that we've seen, was it actually entirely driven by higher yields, or was it just a technical reaction, the fact that equities had really had a very, very strong run over the past 2-3 months? I think right now what's going on is that the market is sniffing some inflationary pressure, but not really a lot, which means that yields go higher, but at the same time there is a very strong global growth backdrop. And to that extent, risk assets should continue to benefit, at least for the next couple of quarters.
But what's priced in at the moment? So what I find a little bit crazy, and I'm no one to judge, but I do find it a little bit crazy, is that we've been telegraphed. It's been said that inflation is coming. The Fed couldn't have been clearer in saying inflation was coming. If you look at WRP, it's a lot priced in. So why the sudden freak out of the markets?
Well, I think as far as bond investors are concerned, I think it really needed to take a lot in order for bond bears to be persuaded that indeed we're going to break from this multi-year range in bonds. But having said all that, I think there is an additional element in there. It's not just in the US. We're just seeing inflation getting higher across the globe. And, you know, when you have all this discussion about this collapse in the Phillips curve all these previous years, alongside all this money that's been packed into the system, and all of a sudden you start seeing inflation picking up the rest of the world, I think you start contemplating the possibility that this Phillips curve relationship is being restored and inflation has started gaining traction globally.